I would like to introduce him. And Thairu is the Deputy Managing Director for Consolidated Bank of Ghana. And he will actually be talking to us today about the potential implications of COVID-19 on the banking sector and the best recovery methods. So Thairu, over to you. Thairu, are you with us?
Can you hear me?
Yes, we can, and we can see you.
I've been trying to get it on, but I had followed the whole thing until my time came, and I couldn't get the camera on.
Oh no. Okay, but now we can see you. So welcome once again. We're very happy to have you.
Thank you very much, and sorry for that mix-up. It's an honor for me to be here and to be a speaker, contributor for this digital banking summit. Thanks everyone who have attended from across the globe. As we may know, COVID-19 first case was confirmed in Africa on February 14th, 2020. Different authorities and countries and jurisdictions instituted various measures. The significance of these measures was quite profound in the way they affected businesses and individuals. So businesses in general and banking in particular had to decide how to realign the way they did business. This is summarized in a very short phrase that McKinsey and company did on the topic of COVID-19, where they said, for companies to survive, speed, agility, and new understanding of customer values are the keys to navigating the next normal. And my 15 minutes will be spent in trying to look at what has happened, where are we, and how do we recover from that. And due to the pandemic, a lot of governments introduced what you called alleviation programs to individuals and businesses. Across Africa, they did it in different ways. And this meant that banks had also to quickly come in and look for ways of supporting the governments in offering this program to the business community and their citizens. Then the regulators also came in, and some of the measures they did had profound impact on the profitability or revenues of the banks. For example, we had cases of reduction in transaction fees, especially in the mobile money, so that the cashless society can grow. There was requirements for loan repayment holidays. All these, especially in the first half, so reduced profitability. And then the regulators, as the deputy governor said this morning, had to relook and quickly accelerate the fintech industry so that they can accelerate the use of the digital channels. So what does this mean into the banks? It means that we are going to see reduction in revenues in the year 2020. We're going to see more participation of the fintechs in the space that we have always assumed is the domain of the banks. So we all had to sit back and ask ourselves, this is unprecedented. How do we exactly change the way we do things so that we can survive to when normality kicks in? A lot of the banks, including CBG, we had to sit back and look at our spending management. We had to look at our capital expenditure, our operating expenditure, and defer a number of the programs that we had put into place for the year 2020. And most of these were things you could defer without impacting customer experience, without impacting the acceleration of digital offerings, and concentrate more on the revenue generating and digital initiatives that would come to serve us better in the new normal. Then the customer experience. You wanted to maintain your customers. That is why we opened the banks. But at the same time, you wanted the customer to be safe. You wanted your staff to be safe. So we had to rethink of our day-to-day operating environment. And for example, in CBG, we went into what we call two-track working environment, where one team would work 1 week and another team would pick up from there. This meant that we tried to do the social distancing, and we also continued to make sure that there is redundancy in the system in case you got an infection in one section of the bank, the other ones can quickly come in and pick it. We also had to look at who can work from home and what do we have that will enable us to do that. Luckily, we had finalized towards the end of last year implementing Windows 365 Teams, and this made sure that at least we could hold all our meetings virtually, and we continue to do so. We could get people to work from home and still continue to be productive. All we needed to make sure is that we equipped them with all the tools that they needed to work, and that is still serving us well because we still have a good number of our people working from home for purposes of social distancing. But this has profound impact on the way forward in the banking industry. And the questions that we all need to ask ourselves is, what services do you need in terms of customer service, in terms of payments? And when you answer that question, you go to look at what is it that you are doing or you're not doing, and you double up on what has worked well for you so far. If it's your digital channels, you put more investments in them so that they are more robust and they can serve a bigger, wider base of the customers. Then, when you're looking at your capital expenditure, you go to look at what has the hugest impact on your customer service, on your processing, on your digital front, and prioritize that, and what doesn't have, then put it in the back burner for when things get back to normal. And what is going to differentiate good banks from great banks is continuing to serve your customers without huge disruptions and adapting to this new normal where customers would like to get the same service, but really not come to your branches. And as we can imagine, yeah, right now we understand a vaccine is almost ready, but it will take a long time, and especially in Africa, for that vaccine to have any impact, because we know it will first of all go to the developed world where they are developing it, and the logistics of trying to get more of it now to the emerging markets may take longer. So we may have to live in this environment until the end of 2021. But it's my hope that it will be quicker than that. Then on the business front, you got to change the operating model. You got to embrace faster decision making. You cannot afford to have analysis or paralysis by analysis, because decisions that you make will impact your customer service and more so the profitability of your institution. We got also to continue thinking of the new norms of working. We can't continue expecting to have office premises and expanding those office premises, because we have realized disruption can stop that model from working. We got to look at ways, and I was reading the other day, banks like Standard Chartered are already looking at ways of making over 70% of their people work from home or work from near home, which means that you may have to think of how do you get partnerships with people like the short-term office suppliers, where you can get hot desks near where your staff reside, and they don't necessarily have to come to office. They can go there and connect like they're still in office. And this is more of an example of distributed office space rather than the common head office that we are talking about. But that brings to this operating model of our branch network. Is the branch network going to survive the way it is at the moment? And my view is, as we get along, customers will start getting used to these new channels of interacting with the bank. And we have to double up on that so that the brick and mortar we have takes the example of what we were being told, Capitec, which is small branches which are located near the customer, but most of the banking is done on their mobile banking rather than coming to the customer, coming to the branch. They only come to the branch just for the cash. And then, as we were told by the deputy governor, all regulators are working towards the digital currency. And if they do that, then we may end up actually with branchless banking for everyone. And it's not new. We have people like Muzo, we have people like Starring Bank, we have people like Revolut who are already doing branchless banking, and they are successful to a great extent. So how do we move from here? I came across an interesting article, again by McKinsey, which said the mental model which will enable rapid revenue recovery has to be taken into place. And they were talking of an acronym called SHAPE, where S stands for startup mindset, which means that every entity, regardless of how huge it is, has to put on that mindset of a startup, nimble and quick to adapt. Otherwise, it will be overtaken by the fintechs, it will be overtaken by all the competitors who are adopting digital strategies very, very quickly. Maybe social media, social banking, may it be the mobile banking, and the partnerships that are taking place. Then, as we get along within this COVID environment, we got to think of the human, that is each one of us. We have our staff. We got to make sure they are safe. We got to put in measures that ensure that the safety of the customer also is taken into account as we continue to transact with them. Then, acceleration of the digital technology and analytics. That has to be done by the banking industry if we got to survive. And I think a lot has been talked about by the previous speakers, and I'm sure a number of people are going to talk about the digital strategy, and which is the mainstay of today's summit. Then there's P for purpose-driven customer playbook. You go to get the customer's insights, and you're not going to get these without analytics. So data analytics is key going forward, and you are only going to change the customer experience of your customers and able to acquire new customers by analyzing and understanding what the customer wants and getting those products to the customers as quickly as possible, rather than off-the-shelf product as we have gotten or we have been doing in the banking industry. The E stands for the ecosystem to drive adaptability. We got to think of partnerships with fintechs. We don't have to see them as competitors. Generally, some will take our lunch, but others will come to complement that skill set that we don't have. May it be mobile lending, may it be payments. So we got to look at the partnerships that are going to help us in accelerating our digital and technology adaptability. Then we got to include new IT models that enable you to integrate new technologies quickly without 2, 3, or 5-month projects. And in it, you got to bring in the agile DevOps, which means you accelerate any new developments and you stop relying on your core banking, but relying on all other systems to complement the core banking, which will end up being more of a database rather than a banking solution. So with that is what the impact in the banking that will be. And so how will our new normal look like? Our new normal will see the payment solutions industry grow significantly, which means people like SWIFT will start getting huge competition where they had a monopoly. The government are adopting to digital channels. They have online.gov portals where all government revenues are being collected. And as such, we as banks who help our customers in paying their taxes, paying services to the government, we have to adopt and integrate into all these new ways that the government are coming up with. For sure, the fintechs are going to do a market grab. They're going to take some of the services that we offer our customers. I think, and I believe maybe people who are more technical than me will talk about this. We got to get to a point whereby the bank will work like a marketplace rather than a banking hall, where you offer products the way Amazon does. Amazon mostly doesn't produce or stock these products. They have people who come and use their platforms to market their products. So we may have to relook at our model, and we look at the marketplace model where we offer platforms, and other people will come also like fintechs and offer their services on these platforms. We are going to see a few mergers and acquisition in the banking industry, in the fintechs, in the payments. We have seen a few examples in Nigeria that have seen some of the fintechs in Nigeria being acquired by the US software houses. But there's nothing which comes without a price. And the price we are paying is the issues on fraud, scamming, and hacking as we accelerate on the digital front. We got to spend a lot of money on the cybersecurity. We got to get the technique, the competence of our people to be able to monitor and stop some of these frauds and stop some of these hackings that we have witnessed, not just across the world, but here in Ghana as well. So with that, That's our new normal, and thanks everyone. And if there are any questions, I'll take them up.
Thank you, Thairu. We are very grateful once again for everything that you've shared. There are no questions, but for the sake of the audience, I would love if they would permit me just to repeat a few of the things you said, because I think it was really important. And okay, I'm seeing that a question did come in, so I will read the question in a second, but I think it's really important that, you know, one of the interesting things is no matter who you call, anywhere in the world, everybody is going through the same challenge. And I think that's the beauty of the summit that we're in today, where we are all on the same page. We're all focused in the same direction. So thank you very much for that. I'll come back to a few of the things that you said, but there's a question from someone named Nicolan Govender. Nicolan, if I've mispronounced your name, please forgive me. But the question to Thairu is, how has COVID-19 impacted customers? Have you seen a greater need and demand for touchless biometric solutions to manage customer fare? So I don't know if you need me to repeat the question or you've heard me.
No, I think it's okay.
Okay.
I have the question. I think COVID-19 has had some impact to our customers. But having said that, some of these technologies have not been readily available, let's say, in the Ghanaian market. So most of the people in the industry or the banks are trying now to implement some of these biometric, for example, solutions. Some of the industry players are still trying to issue contactless cards. We still have the old EMV chip cards being used, and so that is being rolled out. So what it has done is it has shown us the need to accelerate most of these initiatives, and you'll find across the industry a number of people are at various stages of implementation.
Thank you very much, Thairu. And there are no other questions at the moment. So once again, we're very grateful. I think just for the sake of repetition, a couple things that Thairu said. One is we really need to ask ourselves and ask our customers at this point, what services do they really need? And, you know, we need to also look at in the new normal, because the way COVID is going, it's not expected to end anytime soon. So we really need to look at which of our services have the biggest impact on our bottom line and start retooling our business in that way. Physical locations now will have to take a backseat to all things digital. So it's something that's really, really important. Before I move to our next speaker, there are a couple things that I would like to do. One, I would just like to encourage and remind our speakers to stay within the time that they have been given. And then beyond that, I would like to thank as well our sponsors who have helped us, the lead sponsor and co-host of the summit being Huawei. And then we have a number of other sponsors as well, which we will thank as we go throughout the day.